Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of December 11th, 2023. We're going to touch on the economic data that came out last week, what's coming out this week, as well as the different sector performance. And we're going to touch on where we are in the S&P 500 year to date and what it looks like going forward. And then we're going to finally jump into the trades, the option trades that we have on the trading platform. I think it's important that we understand all the different strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit in any market ourselves. Real quick, before we get started, if you appreciate the effort that goes into making these videos, all I ask is that you please hit that like and subscribe button. It helps get the video out to more people, and I really appreciate it, so thank you very much. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're new or learning, I recommend you start small. All right, guys, so we started the week last week in the SPX up here at 45.94, and we gapped down on Monday. But we finished the week up 46.04, so just almost flat last week. So we're up around 17% year to date. We started the year, let's go to the year to date, and we started the year at 38.24 way over here. So we're up quite a bit, up at 46.04. 17% year to date, and right now the PEs are a little bit higher than the 10-year average of 17.5. They are actually 18.8 right now. And looking at the economic data from last week, the unemployment numbers were slightly higher than expected, but not a big deal. Didn't really affect the market. And then going forward for the next week, we've got coming out on the Tuesday the 12th, we've got core CPI numbers. 0.3% is the expectation. So anything below that tells us that we've got inflation in check. And then we've got core PPI numbers on Wednesday, and that also will tell us how we're doing. And then if we move on to the FactSet Earnings Insight report, I'd like to look at this report. We can see the earnings growth going forward. Let's see. We've got year-over-year earnings growth in the S&P of 2.7%, so that's a little bit lower than it was previously. And then if we go to page 16, we can look at the forward year, and this is where the economy, we can see for calendar year 2024, we're expecting 11.8% earnings growth and revenue growth of 5.5%. So that's big. And even in the first quarter, earnings growth of 6.8% and 4.4% for the revenue growth. And then I like to look at the different sectors, the PE ratios down here on page 33. You can still see energy is undervalued. We've got the forward PE and then against the 10-year average. And, it's low. I like energy right now. We've got Exxon that we'll go through on the trade platform. And then real estate, and actually I've got a real estate earnings play that I'm doing this week in Lennar, so keep your eye out for that one. And then consumer discretionary is still low. Yeah, so real estate, energy I like. Financials are actually ticked up a bit last week. But let's move on to the sectors. So on the 5-day, you can see energy was down 3%. This is the 5-day, so all of last week, energy was down big and materials were down. And then year to date, you can see communication services is still way up, as well as technology. So let's jump into the trades that we have on. I've got 3 placeholders here, so keep your eyes out for a video coming in the next day or two. We've got earnings in Adobe on Wednesday after the close. So you're going to want to put on, I'm going to put on an iron condor, right? I'll adjust the strike prices and the price, and I'll place that trade Wednesday afternoon before the close. And then Costco as well. has earnings on Thursday, so I'll place it on Thursday before the close, and then Lennar in the afternoon on Thursday after the close as well. So I've got placeholders for that. You can see they're way above the market, and I've got good till cancel orders, so I'll just adjust those prior to the date. But I've already done my homework on those, and I'll like I said, I've got a video covering those trades and why I'm doing the iron condors. But looking at the trades that we have on, AMD is the first one. This one's done really well for us this year. I closed out all my DC positions in AMD, and now I'm only in January with a 125, 115 put vertical. And you can see over the last 60 days, we made 150 bucks, 180 days, almost $600. So we've done pretty well in AMD, mainly doing iron condors, looking for it to stay within that range. I like to look at the monthly chart, and then I go to the 30-minute. And this is on the Tasty Trade platform. There's a link down below if you're interested. But it's been trading in a range from, looks like 115 for the month, 114, all the way up to 131. And right now it's in that range between 126 and 131. But I've got the credit or the put credit spread, so I'll look on any up move to put on a call credit spread as well at the top of that range going forward. But that one's been a good one for us. We did an earnings trade in Chewy last week, and then we adjusted it. It went against us. We sold a put, and I did a video on that, and then also on the adjustment. So you can check those videos out. I thought that Chewy would do pretty well, and the earnings was actually okay, but the guidance going forward was not as expected, and it dropped a little. What I did was I rolled out to the next month, January, from December, and added a call spread. And I even since then sold a put 17.5 because IVR was still collapsing and high. There was good premium, but that's already moved up now to 19. So just on selling that extra put, I made another $96 on that. So just some things that you can do to adjust trades in if the earnings goes against you. And yeah, we haven't traded a lot, but we've made 240 bucks over the last year in Chewy. But I expect to make another 300 bucks off of this trade right now. Actually, we've got 315 left in extrinsic value to be made. And you can see if we go to the curve mode, we're right in the center between in the green profit area. And I expect that it should stay in that and trade in that range, but we shall see and make adjustments as necessary. Costco, again, look out for the video on that one. I'm not going to jump into it right here. DraftKings, this one's been great for us. It's just been a cash cow for us. I think over the last year, yeah, $1,780. And I've just got leaps options against it, 2 of them, and then selling calls. And you can see we had a drop down to 35. So the call is actually making $129 left on that on the 40 call. Any up move, I'll sell a call against the other leaps option because it doesn't take any more buying power. But you can see profit zone as it moves up. So bullish on DraftKings. They should do well as online gambling is legalized in more states. Humana is an insurance healthcare stock, and it's kind of gone against us, but I'm hanging in there long. They should do well with the higher interest rates, and they've got $30 billion in cash, and it just kind of diversifies the portfolio. But I'm long Humana, and we'll wait for that to come back. Yeah, it's been down. But I do expect long-term, it's a great company, good balance sheet and income statement, and I suspect that it will be moving up. So I'm going to hang in there. L3 and Lockheed, these are very similar. I moved out I've got put verticals in both L3 Harris and Lockheed, and they've both been doing very well. Lockheed, you can see 227. I've just started trading these actually over the last 30 days. $227 in Lockheed Martin, and L3 Harris, um, almost $400 in the last 30 days. So they've both been doing very well. I'm just going to stay long. My targets on L3 were at 195. I can see that going up to $240 range. And then Lockheed Martin as well. We're at 448 and yeah, 448, and I've got a $500 target on it as well. So I think I'm going to stay long. The defense stocks right now, they're doing well. Lulu was an earnings trade that we covered last week. Actually did really well in on this trade. I think I made, let's see, yeah, $600 in this account. We actually also traded it in another account, so made well over $1,000 in Lulu. I just thought that earnings would be good, and I thought that it was at the top of its range. If you look at the 1 year, that's the 1 month, you can see it's at the top of its range. But even the 1 year, it's way up there. So I figured, hey, if it's going to be good, it's not going to drop that much, and then it can't skyrocket that much higher either because it is already so high. So it's got good fundamentals. They do both online very well and brick and mortar, but I actually did a video on that earnings trade, so you can check that one out as well. But I threw on another one because you look at this range from 460 to 540. That's a big range that we can still profit and make quite a bit of premium. You can see this big range, and 460 to 540. And if you look here, 460 to 540 would be way up there. I think I'm more concerned about the downside in Lulu, but I think we're going to be okay. Palantir, this has been a great stock as well for us. Let's look at just in the last 30 days, we've made $400 in Palantir, and it's been trading in that range between 21, 22 down to the 15 level. It's at 17.7 right now. I'm long Palantir. I think it can go way up. They're great in commercial and defense and AI and cloud. It's pretty much a cash machine. I like the poor man's covered call, so I'll do leaps options and then I'll sell calls against them. So on any up move, I'll sell calls against these 3 leaps that we have on, and continue to trade that one within the range. SoFi, bank stock, online, love the stock long term. I'm long, as you can see. I don't even bother selling because I think it's got so much upside. I guess I would if I could collect good premium with the calls, but there's not much premium in the calls selling against the leaps options. So to me, it's not worth it because there can be a big move in the leaps, and I don't want my calls to stop it out. So that's one that I do not really do the calls against it. SPX, I've got to put together a video. I haven't been able to trade it as much because I've been traveling in a way, so I need to be in front of my computer to really trade that well. But I actually traded it on Friday, and it went against me, so I rolled it out to Monday and widened the spreads by $10. But you can see it's got the negative 150 deltas, but a lot of my other delta positions are long, so I'll just wait until the market does come down. Again, it was up last week, and if it opens down on Monday, I'll probably get out of this, but I'll continue to make videos on 0 DTE SPX options. So let me know what you're doing in those as well. Leave a comment, ask any questions, but I sell call credit spreads in SPX to counteract the positive delta throughout the rest of my portfolio. TDOC, Teledoc, I'm long. I sell calls against my leaps. I've got one on right now, 102 left to collect. We're at 19. It's been trading in that range between 15 and 19. And, over the last year, we've continued to do well in Teledoc. Yeah, $700 over the last year, but we'll just ride those leaps options as the stock moves up. But it's healthcare online. I think it's a great business to be in. They've got solid fundamentals. Verizon, a dividend stock, pays a hefty dividend, so I own the shares outright. I'll continue to add on any down move. It's been sticking around 38 for the last few weeks. Wells Fargo, bank stocks actually did jump a little last week, so they're going to, I think, do pretty well. You noticed in the PE ratios that banks are still, financials are actually they creeped up. So, but I do like banks long term, and I'll look to get into more as they jump up, continue to jump up. ExxonMobil, energy's down, so definitely long energy. I've got put verticals in ExxonMobil. Crude oil is now down at almost $70 a barrel, so I've kind of gotten away from trading the futures and crude and like to stick more with the stock. So I may stick more with ExxonMobil, Chevron, some of the others. There's a lot of good energy stocks, but if crude gets too much lower, I may be tempted to sell a put credit spread in the crude oil futures. And I think that is about it, guys. So again, next week we've got earnings in Adobe, Costco, and Lennar. So keep your eyes out for that video. I'm going to do one video and cover all three, and keep your eyes up for that. All right, guys, I put a link down below for the free options workshop, other links as well. Check those out, and let me know in the comments below what you're trading. Any questions that you have, I'll answer every one. So leave me your questions and comments. Remember to hit like and subscribe. Thanks for watching. I'll see you in the next one.